Hi, this is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and those 10-year note yields going lower, but stubbornly so. Over the last 2 to 3 sessions, we've seen 10-year yields go from about 279 down to 271, and we settled somewhere about 273. So really not seeing a huge move in yields, despite the fact that we saw such a massive sell-off in equities and such a rally in gold, and the dollar seems to be looking shaky. So there's a lot of things going on in the macro market which aren't really feeding into treasuries, which still continue to see yields hover near that 275 level in yield, which we thought once we traded through we would see a spillover and buyers come in and take us to the next level. That hasn't happened. Perhaps the bond market knows something that the rest of us don't. And if you look at market volatility, it's higher, but not much higher. And like we've seen in equities, we hear about the VIX exploding, and we talk about levels not seen in months and hitting different averages in the equities. Market volatility in the treasury sector remains stubbornly low. Yes, it's higher, but it's not like showing any kind of fear. It's not showing any kind of, oh my gosh, moment that you would think would come on these other types of moves around the world. And yes, because on Monday it was a low volume day because Europe was closed, it maybe is taking a little bit out of the thunder of the selling in equities and the rise in commodities. However, I think that the treasury market is still waiting for something to happen. And if you look at the curve's always been the talk of the town. It's been continuing to flatten. Yes, we saw a modest uptick. We actually did, amongst everything else that's been trading today. A modest uptick could have been just short covering, or it could have been just short covering in the curve. But I think that right now, the treasury curve still remains on those decade lows, and 2s, 10s, and 5s, 30s, and however way you want to put it, they remain on a flattening trend and a flattening bias, despite the fact that the Fed has said they're going to raise rates multiple times this year and next year and the year after that, and despite the fact that growth seems to be coming back and inflation seems to be maybe hitting the Fed's target. So a lot of things need to change, but right now the treasury market seems to be waiting still for something to happen. Maybe it's normalization, maybe it's Friday's employment trade, maybe it's inflation wages out of Friday's trade, maybe it's Chairman Powell speaking on Friday out of Chicago. So there's a lot of what ifs up there, but ultimately in a macro sense, you see the equity market sell off, you see gold rallying 20 bucks, and you see this treasury market just kind of looking shrug its shoulders. You know that something's behind that, but we just haven't gotten to it yet. So right now, treasury's eerily and cautiously watching the rest of the market. This is Todd Colvin coming to you from the floor of the CME Group.